Hi, welcome to the Dow Market View for Thursday, the 9th of October 2014. And as you can see from the chart, no qualified signals yesterday. We had two potential signals. We had the triple X here at 1740, but unfortunately it wasn't filled before the market actually moved higher. And then, of course, from 7 p.m. you see the FOMC effect in the market there, moving the market sharply higher, which is what I spoke about during yesterday's market view, about 12 minutes in to be precise, that we would see a reversal because, as I've said before, the Fed wants to keep the Ponzi scheme alive, and they will do anything to get the market to move back to the upside. So the sell signal here, or the potential sell signal, wasn't filled, wouldn't have been valid anyway because the news was out at 7 p.m. and there you see the market's reaction, which is the bulk of yesterday's move. So a very frustrating day really, because we could have had some signals beforehand. We certainly had the range. There was a 100 point range there, but no signal, so there's not a lot we can do about that, I'm afraid. So moving on to the daily chart, we can see the straight reversal yesterday. We can see some buying coming into the market, but I can guarantee you there will also be a lot of squeezing going on here. So the squeeze of the short traders, those that were short for the last 2 days, will have been forced to exit their positions, and if you're short you have to buy. And of course that will add to the upside momentum there, which is what we see. In this daily chart, let's just have a look and see where we are as far as the retracement is concerned. We're going to be through the 76%, just at it. We're just at the 76%, which is the 17,000 psychological level. So keep this one in mind. Close above 17,000 will likely see the market continue to move higher in the short term, but as I said in yesterday's market view, keep an eye on the background. At the moment we've got this down move, and here we're having this correction. It'll be interesting to see how far the market does pull back, if it does, to the downside before starting to move back to the upside there. And in the news today, it's that time of the month for interest rate announcements. We've got the asset purchase facility at 12, official bank rate, MPC rate statement, unemployment claims. At 4 p.m. Draghi's going to speak, so that could have a bit of an impact on the Dow, but tends not to affect it too much. More currencies than stock markets. G20 meeting all day today as well, so that could have an effect at times when the press are allowed to know what's going on. And then Fisher's going to speak at 6:30 p.m. So it should add a bit of volatility to the market today. Right, let's have a quick look at the implied volatility. And once again, there's a problem with the site. It's not giving the actual figures, unless, of course, because this is a free site, they've decided to remove it, but it just seems slightly odd that they would do that. So the figures aren't available, but we can see from the chart there that the implied volatility dropping down during yesterday as the market made its reversal back to the upside there. Right, well, that's it for today. There's not a lot else I can really say and point out, because it was just one of those days yesterday. The market fairly sideways, 100-point range until the FOMC announcement, and then the market just moving back to the upside as expected. These days it's been the same for the last 6 years since interest rates went down to 0.25% in the US, and like I say, keeping the market rigged is the job of the Fed there. Right, let's call it a day. I will see you in tomorrow's market view. As ever, thanks for your support and also for watching. I'll see you in the next one.